The question I often get, especially among my group of subscribers at the Endgame Investor, is how much silver do I need to buy a house? Well, hello there, my friends. Rafi here, coming at you with the next silver report for Arcadia Economics. And we have some fun stuff today. As always, we're going to focus on real estate and a review of 2021 and what to hopefully expect from 2022. I will not comply, and we won't say with what, because we don't want to get censored. Let's go right to the silver charts, shall we? All right, so a question I often get, especially among my group of subscribers at the Endgame Investor, is how much silver do I need for the endgame, or how much silver do I need to buy a house, or whatever it is? Well, I can tell you how much silver you probably need to buy a house by the time this is all over, and we can extrapolate from there how much you need for your basic necessities when the SHTF, whatever happens. This is a good heuristic. So here we have the US house price in silver since 1964, when silver was finally demonetized for good. Dimes, quarters, and half dollars were no longer made of silver. You can see here that from 1971, when Nixon closed that ever so popular gold window, you have here the first circle, we have been pivoting around 20,000 ounces of silver for the average house in the United States.
Pivot! Pivot! Pivot!
The average in the pivot is around 20,000 ounces of silver, which is about 20 junk bags of silver. Now, this number is important because we see as a pivot in the mid-1980s, silver fell from the 80s until around 2000, which was riding off the coattails of a fairly responsible Federal Reserve that raised interest rates in 1980, bringing an end to the dollar collapse of that period. And silver fell versus real estate until about 2003, when from then until 2011, the amount of silver it took to buy a house fell by about 90%. Now, what is interesting about this, especially, is that this was the bulk of the housing bubble from 2000 to 2006 over here. And during that time, when housing prices in the US were bubbling and causing eventually a financial collapse, the price of housing in silver was absolutely collapsing. And it pivoted around this 20,000 ounce number till we get to 2011, when it reached close to 1980 lows of looks like to be about 2,000 ounces of silver, got to about 5,000, and now silver has fallen again since 2011, and we're back now at that pivot line. But I don't think we're going to be going above it for long, if we do at all, because real estate is about to fall in silver terms, just as it did leading up to 1980. So the answer is, when do you want to exchange your silver, your junk silver, whatever you have, your stacks, for real estate? Somewhere around 2,500 ounces. The data that I had available here was real estate in terms of gold. Silver data is not available, but we can plug in the gold-silver ratio if you want to do that to these charts. Now here we have the 6-city average in Australia of real estate in terms of gold. And we see here that as money was on a gold standard and gold was direct money, real estate was pretty much stable until around 1971, when Nixon closed the gold window and we see a collapse of money value in terms of real estate. This is not really real estate going up. This is money going down. And you can see that here as the price of real estate in gold in Australia goes up and down with different inflationary crises caused by central banks. But in the end, it is more or less stable. Around now 363 ounces of gold. But there's something very interesting about this chart that I want to emphasize, because another question that I get is that if you invest in gold or silver in times of a deflationary collapse, isn't that a bad idea? Because of course your nominal gains will go way down. However, pay attention to these two collapses of real estate in gold terms and therefore in silver terms as well. 1929, there was a peak and there was a collapse of real estate in gold terms going into the Great Depression. So if you own gold or silver during the Great Depression, the price of real estate, of real assets in gold and silver during the Great Depression fell precipitously. And therefore, owning real money, even in times of a deflationary collapse, is more advantageous than owning real estate. Because when it comes down to it, whether there is a hyperinflation in money substitute terms or there is a deflation, either way, the value of real assets collapses in terms of real money because everything is deflating in terms of real money, whether it's hyperinflation or deflation. Again, if we go back to this chart, you can see the same thing in silver terms from around 2003 to 2008, 2007, the housing bubble. Housing actually got a lot cheaper in terms of real money. So it was an inflationary problem. It was not a housing bubble. It was a dollar bubble reflected in housing. That's what it was. We can move to the UK. Same thing here. The price of real estate in silver is around the same as it was in the mid-1980s and hasn't changed much. So the real money, again, we see here is silver. Now I see a lot of people talking about cup and handle patterns in silver. And yes, that is true. And the cup and handle that they usually point out is the cup and handle from around 1980 to 2011, when we saw twin peaks of around $50. But there was another cup and handle that lasted for about 100 years from the Civil War, end of the Civil War, 1860, 1870, until around 1970, when the gold window was finally closed. See this enormous cup, 100 years in silver, leading to a spike in 1980, and then another cup. I don't even have to draw it here because it's so obvious. I'm mousing over with pointer here. You see this enormous cup, but a cup that was much smaller than this 100-year cup. This one is about 30 years from 1980 to 2011. And now we're going up the third one. And here is a tiny, tiny little handle. This is where we are now, but put it in perspective. We know what is going to happen here. It is just a matter of time. But I wanted to go back to here. You see this little trough here, 1930. This is Great Depression era. And remember, if we go back to that chart of housing prices in terms of silver, here is what I am talking about. Here in the mid-1930s, silver goes through an all-time low in extremely long-term charts of, what is this? This looks like 150 years. So yes, silver nominally hit an all-time low during the Great Depression, but still, it was a better hold than real estate. Conclusion being, we are in our third cup and handle pattern since 1860, 1870, and this was really the crime against silver, 1873, when silver became demonetized and we went on a full gold standard rather than a silver standard. And why do people call that a crime? Because poor people owned silver and most people are poor. Rich people own gold. And when the dollar switched from a silver standard to a gold standard in 1873, the poor people's money was demonetized and therefore demand for silver went down. And that hit the poor's pockets a lot more than it hit the rich's pockets and transferred wealth from the poor and middle class to the rich, which is exactly what they do all the time. Lockdowns are just another instance of it, but it's the same thing. And that's why we are silver bugs, because we know what the public's money is, and that is what we were fighting for. I also hear, isn't the Fed's taper and raising interest rates, isn't that going to hurt the silver price? Probably not, especially considering the 1978 to 1980 rise in interest rates coinciding with gold, with silver's all-time high and gold's all-time high. But in any case, the taper is not happening. You can just look at the chart instead of the stupid headlines that the Fed is always feeding to CNBC about their taper and what they're going to do. You could just look at the numbers. November 3rd is when the Fed announced its taper. They announced it. They were going to lower the minimum amount of bonds they purchased every month from 120 billion per month to 105 billion per month. So here we have that announcement, and the balance sheet was at $8,574,871,000,000. And now the latest number I have here in this red box from December 22nd is $8,790,495. The difference is 215.624 billion in 7 weeks. That is a rate of $140 billion per month, from a rate pre-taper announcement of 120 billion per month. So are they tapering? No, they are increasing bond purchases, and they will keep doing this. If they do taper, yes, we're going to see trouble in the stock market. I don't think silver will respond negatively for too long, if it does at all. But for now, we can be sure by the numbers the Fed right now is lying. Now, when we get into 2022, there are rumors, there's talk of a deflationary spiral possible because interest rates are not falling, but I just showed you why they're not falling, because the Fed is actually buying more bonds, not less, and it's not tapering. That's why interest rates are not falling. Here we have Javier Blas, the commodity analyst for Bloomberg, and he has some good tweets very often. This debate of whether we're going to see consumer price inflation fall in 2022, it's not a serious argument, because very simply, there's a lot of companies, a lot of production companies, food companies, and retail companies that have not even raised prices yet, and we're waiting for the new year to change their pricing structure. And a lot of that is going to kick in January. Even if they rejigger the CPI, which they probably will, which they said they're going to do, it's not going to fully absorb all the price increases that are coming at the consumer level. Here, Blas says, the new year is going to bring lots of price increases as retailers update their prices. The trend is already underway. Take a look at the support Twitter handle of some of the bigger brands, for example, IKEA UK below, and you will see lots of cases. Somebody tweets, IKEA UK support. Can you tell me why products added to my basket yesterday have increased in price by 25 to 40% overnight? IKEA UK support responds, hello, due to increased costs across the supply chain, including raw materials, transport, and logistics, we have tried for as long as we can to absorb the cost. However, we have now applied a price increase to a lot of our ranges, and these will now be the current price. Vicky, isn't that nice? A lot of companies are going to kick in new pricing structures on January 1st, and it's going to be absorbed in the CPI. Now here is from the New York Post on the right, talking about food prices for 2022. If you think your grocery bills are high, wait until next month, meaning January. A fresh wave of supermarket price hikes is expected to begin in January, raising prices anywhere from 2% to 20% on a slew of staples, including pasta, condiments, soups, cookies, produce, dairy products, and meats, according to a new report. The question is, people, are these prices going to go up in real money terms? Probably not, or very ephemerally until silver responds, which will be quickly. A soaring inflation rate, we continue, of 6.8% as of November, the highest rate increase in 39 years, shows no signs of slowing down, with major food manufacturers preparing to raise their prices once again, according to the Wall Street Journal. Persistent supply chain disruptions and increasing labor costs are a major factor in the increases. Kraft Heinz, which makes Oscar Mayer lunch meats, Kraft macaroni and cheese, and Jell-O pudding, told retailers it is planning to raise prices on some items by as much as 20%, according to a memo viewed by the paper. Price inflation on the consumer level has just gotten started. Wait until next year, and it will intensify. Here's Tyson Foods' latest earnings call, a piece of it. In parallel to our actions to improve volume, we have also worked to recover inflation through pricing, achieving a 13% price improvement for the fiscal year and a 24% increase in the fourth quarter alone. What an achievement for Tyson Foods. Congratulations, guys. In this dynamic environment, says Tyson, we will be aggressive in monitoring inflation and driving price recovery activities. What does that mean? That means the psychology of the crack-up boom is approaching. Companies are monitoring price inflation like hawks and trying to get in front of it by increasing prices before their costs go up to maintain their profit margins. This is how the crack-up boom begins. In 2022, we'll see a big jump towards that final crack-up boom. Whether it will finalize itself in 2022, I do not know, but it will get a lot closer. Conclusion, my friends, is for 2022, we're not going to see price increases as much as we're going to see a dollar collapse in terms of consumer goods. And when that happens, you want to be in real money. Remember the crime of 1873? That was 150 years ago, 3 debt jubilees ago. 50 years after 1873 was 1923, when we saw the first major hyperinflation in an industrialized society. And then 1973, 50 years after that, when Nixon finally, for good, closed the gold window after 1971, when we tried to pin it to $42.22 an ounce in 1973. And now we are 50 years later into the next Jubilee cycle, into 2022/2023. And yes, we will return to gold, but ultimately, I believe the public will return to silver as gold becomes too expensive. And there's one more thing I wanted to emphasize here. Many people make fun of the silver bugs and call them religious fanatics or true believers or whatever. And there is an element of truth to that in a certain sense. Let me explain what it is. Because if you are a religious person, whether you believe in the supernatural or not, a religious person I'm defining as someone who has iron morals, lives to be a good person, and believes in a moral compass, whatever guides him or her or whatever. That is the religious mindset, in my mind, at least. And when we invest, sometimes we make timing mistakes. When we are religious people, sometimes we make prediction mistakes, and sometimes we do make mistakes. But we understand our moral compass and we understand what is right, and it keeps guiding us for the rest of our lives. It is the same thing with real money investing. We know that we are right. Sometimes we make investment mistakes, but that doesn't mean our principles are wrong. We keep our faith because we know that it is correct, because we know what honest money is, and we know how it keeps society together and how inflation destroys culture in the end, destroys civilization. We are at the tail end of that now, which is why we are silver bugs, ultimately. Keep that in mind for 2022. And as this system falls apart, we will only get stronger as long as we keep our principles in mind. This is Rafi of the Endgame Investor coming at you with Arcadia Economics Weekly Silver Report. Have a great new year and happy stacking.
Well, thank you as always, Rafi. Another great silver report and another ending of the year, as it's December 30th today. I'm not sure, we may not have a video tomorrow unless something wild comes up. And what an eventful year in silver 2021 has been. Life-changing for me, and I think anyone else who's been invested in this silver saga for however long that may have been for you. And I would just like to say that if you're watching this video now, then you've been a part, that you have also been a part of this. I feel quite honored and blessed to be the one who's talking to you through this channel each day. Yet life had me close to giving up on this a couple of times throughout the years. And without the people who've been involved, and that's every single person who's watching this, I don't think we would have been able to do what I do feel proud of, the things that we've done in the world this year. So thank you all. I wish you a happy new year. Please be safe and healthy out there. I do think there are special things coming ahead in 2022. That saying, it's often darkest before dawn, has been going through my mind quite a bit recently. And we'll see what life has planned out, but I just really appreciate everyone who's been a part of this journey. Hope you have the strength to stay strong out there, and I'll look forward to seeing you again in 2022. Happy New Year, everybody.
based on ideas of a few men with a plan, shared values and goals that united this clan, that each man would earn and produce as he can. Creators and thinkers were encouraged in this way. Their standard of life seemed to increase most every day. Their great reward was freedom to do as they may, and the fortune of their land was held high on display. The land of Arcadia was a model of its time, a fountain of freedom, their needs were aligned, where liberty reigned for society in its prime. They cared for their weak, tired, and poor by design. Arcadia was known as the utopia of its time, a wondrous pasture with virtues divine. While short of perfection, the sun often shined on the life of a miracle that came to exist on prudence defined. But the greenness of the land was about to embark on the great test of time.